The S&P 500 daily cloud chart shows the bottom of the cloud 26 bars back at 4338.68 for today on the 3rd. And to the upside, to get to that bottom of the cloud 26 bars back is still the top of the lower range here in light blue, 4305 to 4325, and that would get out of the range and into no man's land again. Then on the S&P 500 weekly chart, there's the broadening top in dashed red extension here, and that's at 4312.47. So right before getting out of the zone, and then above the zone and into no man's land is this weekly bottom line 2 in pink right above the broadening top in dashed red still, and that's at 4330.13. And it looks like traders and investors are living and dying on economic reports. So for today, there's the JOLTS report, the job opening labor turnover report. And they have that at even from last week. So we're in that fine line of good reports are bad news or bad reports are good news. So if that gets beat to the downside and there's way less job openings, then the economy will appear to be slowing, and that should drive traders and investors into the Treasury bond ETFs for flight to safety. If that gets beat to the upside and there's more jobs created and labor turnover, meaning that people are looking for the grass that's greener on the other side, that should indicate a strong economy, and then Treasury yields will start their march onwards and upwards again past 5% eventually. And I believe traders and investors are starting to learn that this ADP employment report on Wednesday should be ignored, and wait for Thursday and Friday initial jobless claims. Again, that's similar to the JOLTS, and they're showing more jobless claims being filed than the previous week. So that would mean a weakening economy. And then there's the big one, U.S. employment report, 170,000 versus 187 last report. And they're predicting the U.S. unemployment rate to tick down again, and that indicates a strong labor force and strong economy out there. And interest rates will continue their march onwards and upwards. Same thing with hourly wages, and that's going to tick up 0.1% there. And while not spiraling completely out of control, the price to earnings ratio here for hourly wages to inflation is ticking up, so people are getting paid more as they're demanding more, and that should continue to drive the 10-year interest rate up, and it's eventually going to come to the tipping point where people are going to start pouring into the Treasury ETFs, TLT, IEF, and the likes of those, as it looks like the Fed will quite possibly put the kibosh on this whole thing, with interest rate hikes continuing when they're betting that they won't. And zigzag shows no swing point to the upside yet. Let's give it a few more days to see if we can continue getting higher lows here as it goes up, and then it will eventually anchor itself here and point up. And the demand line ongoing here made it easy as price was a higher close than the previous day. So a close below this line for end of day today on the 3rd will qualify that. Same thing with this one way further down here. So this level for today is at 4244.90. So a close under that level end of day today will qualify this demand line. And the 200 EMA is holding back the water here. So that's pretty good support for now. Lower Stark band is at 4224.05. And the lower Bollinger Band is near there also, 4209.76. And then the arc down 3.618 level is at 4184.15.